So you get to the markets and you're excited because you see a demand setup and you get in aggressive only for the zone to be invalidated. And you can't figure out what just happened. In this video, I'll show you how to read the 1 hour chart and how exactly to spot a useless zone. Welcome back to Mark for Success, where I help beginners become profitable day traders. The day of this recording was Wednesday, May 13th, and I just wanted to do a review of the 1 hour chart so that you guys can have a better understanding of what to look for when you get to the markets. So what I'm doing here is marking out the high that was made on Monday, May 11th. This was the highest high of the week thus far. And after price made that high, it began to move down. So I'm just marking out the support levels that were broken and simply labeling the breakup structures. Before price began to move back up, it came in contact with a support level, and that's when it shot up with the green candles that you see on the screen, only to get rejected by the resistance level that was waiting right there. So price literally made a quick reversal pattern and proceeded to move back down. I also want to make note of the fact that the last 1 hour candle was a red candle at closure. So that, along with the market structure, was letting us know that our bias was bearish. So we're practically looking for sells. The last thing I did on the hourly was to mark out the 1 hour supply zone. Then I scaled down to the 15 minutes time frame to mark my zone there as well. You can see I'm just highlighting the area. Finally, we get to the 5 minutes chart, which is normally our entry time frame, and I'm looking for some bearish movements. You'll notice that the price was moving upward and did a 2-level break. Now, if all you did was jump to the 5 minutes chart and decide you're going to take buys because gold is a bullish instrument and you should only be buying in an uptrending market, then this is where you would have gotten in trouble. If you did not analyze the 1 hour chart, then you'd probably be looking at the red candle thinking that it was a valid demand area, especially since we see that little reversal pattern at the bottom and price broke the high that was made after the neckline break. Then without knowing, you'd actually think that it was a good zone. But I promise this is a very useless zone. Why? Well, the only reason price came back to that zone was because the selling pressure from the 1 hour zone forced price back down to the 5 minute demand level. And whenever price is coming from a larger zone down to a smaller zone, it is usually with the intention to break through that area. So if you saw price returning and you got in aggressive as soon as you saw price touch the zone, then you'd get stopped out. Yeah, so you'd practically lose a trade unnecessarily because there was no buy there to begin with. So how do you know if the zone is useless? Well, one, if the price came in contact with a larger zone. And I'm saying this because if it came in contact with a larger zone and price is returning to the lower time frame zone and you were planning to take an entry from that zone, you do not want to take that trade from that zone at all. Two, go easy on the aggressive entries. Let the market show you what it wants to do. So wait for some form of confirmation from the zone before you actually get in. And even if you got some form of confirmation signal from that zone in particular, it would have still been a losing trade because the zone is just bad. So do me a favor, always pay attention to the 1 hour chart so that you can have a better sense of direction and you'll be less likely to end up on the wrong side of the market. Now, if you got some clarity from this video, be sure to like, comment, subscribe, and share the video with someone who may need to see this. And I'll see you on the next one.